Hi, this is Acme with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 28th of April. Starting off with the FTSE 100, which is eyeing up an 11th consecutive day up. You can see that after the rug pull below 8,200, the markets bounced back, gave us a warning that we were back in the channel, and the next place for it to go is the 50-day moving average, currently at 85.14. Above that, we're hopefully back in the January to March range, which was 85 to 8,900. On the downside, anything, not expecting anything lower than the 200-day line there, 83.45, but worst case would be 82.13 in the floor of that channel. Moving along to the DAX, and here even more bravado in terms of the bullish recovery, gapped up last week, held the top of the gap and pushing through the 50-day moving average. Just got that gap up there at 22,800 as the initial target there for this market. I suppose that line is a bit redundant now, maybe a bit wider than I've drawn, and you can see that we are hoping that we'll stay above the top of that gap, 21,700. Worst case, we've got to fill the gap down to 21,300 before heading higher again. RSI still only at 57, so even though we've bounced many thousands of points, RSI is still modest and leaves gas in the tank for further recovery. Moving along to the Dow, and here, so actually the worst of the three, still below RSI 50, still below that December support line projection, and still below recent 40,800 resistance. That really is the line in the sand, 40,800, for a proper recovery here, especially given that that was also the initial March support, as well all the March support. So all roads or everything leads to 40,800. On the downside, hoping that we won't see anything lower really than 39,000 near that gap that we had left last week. Moving on to Bitcoin, where it's also up and away, well, at least in terms of being above or back in the range between 90,000 and 110,000. You can see we're also back in that rising trend channel from back in March. Top of the channel there, 120,000, and we're looking for that perhaps as soon as the end of next month if we can stay above 90,000. So bullish, or very bullish in a way, given the bear trap rebound that we had from below 76,000 earlier this month. Moving along to gold, and here the picture is of trying to guess where the market will find support. So far it's finding support above the old rising trend channel from November, which is pretty impressive, 32.60. There is a steeper rising trend channel shown in black, which has its support line there, I suppose, 32.30, and that needs to be held in order to get this market up to 3,800 by the end of next month. That obviously seems rather ambitious at the moment, but that is still possible while we're above 32,000, or 32.30 rather. RSI at 58, so even with the pullback, we're still above neutral 50, which is a positive. Moving along to the stocks, and starting off with a less familiar name, ActiveOps, which sounds rather military, but a bear trap gap reversal here from below the initial January support there, 96 pence. The initial target here, £1.14, but actually we're looking for up to £1.55 by the end of next month, while we're above recent resistance around the 105 level, ideally. Obviously we stay above that 50-day moving average, but a good setup there on that situation. On to Asiamet, where I've tweaked the tweaked the charting here, a rising trend channel there from September. Top of the channel there, heading for 1.2 pence, hopefully by the end of next month, while we remain above the 50-day line in the floor of the channel there at 0.86. The other point to note is that the shares seem quite keen to bounce off RSA 50. We've had two bounces there over the recent past, which tends to be a leading indicator on the upside. I think I covered Beacon over the weekend, but here it's back again with a nice little rise, up 10%. The feeling here was that we could head back to the top of that rising trend channel base at 007, and hoping for that by the end of next month, and that would be achieved, especially if we can stay above 003, the floor of that channel there on that daily chart. I also covered BSF yesterday, and it's nice to see the shares consolidating above the 200-day line there at 3 pence. And I tweeted out initially that on the right side of 3 pence we could head up to 5 pence plus. Looks like it could be 5.5 pence at the top of that broadening triangle from June, and that would be helped along, or is helped along by the way that the 50-day line is rising. But an end-of-day close above that 200-day line would be the first one in many months, and I think the first time since the beginning of last year. So that would suggest a technical turnaround after the full storm that we had back in January. On to Chesterfield, which looks like another charting winner here. Here we've hit the top of the rising trend channel there at 0.77, which was the initial target, second target there towards 1.1 pence by the end of next month, while we remain above the recent resistance there around 3/4 of a penny on an end-of-day close basis. Moving on to GreenRoc, and here yet another blaster through the target area, mid-move consolidation breakout, rising 50 and 200-day lines. It looks like we'll have a golden cross early next month. The target here, the best case scenario target here, has been 3.5 pence, and that looks like it'll be done in a few days. After that, we're looking for hopefully the old highs there from the end of 2023, as high as 5 pence by the end of next month. So let's colour that in and see what happens there. But the upside here valid while we're above 2.5 pence. I don't normally look at the bigger ones, or bigger stocks rather, but Indivior was too hard to resist, falling out of this falling wedge, breaking the 200-day moving average properly for the first time since this time last year, and looking for £11 by the end of next month. It'll be interesting to see what actually gets the stock to do that, but we actually have a bear trap island reversal, so gapping down to new lows and then gapping up twice now. And if you look closely, you can see both the 50 and 200-day lines are rising, so this one looks like it's hotter than July at the moment. Upside value while we're above that 200-day line there at £8.22 on an end-of-day close basis. It looks like I'm the only person in the world following the share price of Insig-AI, and just as well, really, we managed to break our first target there at 24 pence, about 24 pence, looking for 30 pence, which is the upper parallel of that rising trend channel base. And you can see that we've had double bounces and more above RSI 50 over the recent past, so this looks like it's getting some decent momentum, and I think that's backed by recent positive news at the company as well. The Metals One show continues. I was quibbling over the weekend that maybe we need to get the shares back above 20 pence quickly so that we can achieve our 34 pence target by the end of next month. It looks like it could be done even by the end of this month. Overall target by the end of next month would be 40 pence, and hopefully that can be delivered on time while we stay on the right side of 20 pence. Moving along to Poolbeg, which hasn't been here for quite some time. You can probably tell why by the chart, which has been going down basically for the best part of a year. But very interesting looking candles here over the last 4 sessions. Opening at the low, closing at the high. That doesn't happen by accident, especially in a rubbish market as we have at the moment. We've broken neckline resistance at 3 pence and are breaking the 50-day line. If we can get an end-of-day close above 3 pence, looking for the shares to hit 5 pence and fill that gap from February by the end of next month, or hopefully much sooner. This does look very strong indeed, and there was that final little bear trap there. So maybe whatever good news the market was expecting last spring might be delivered this spring. Moving on to Predator, where one talks about the stock with guarded words in case one upsets anyone, but this looks as though it will finally break the 50-day line after various attempts over the post-January period. The obvious target there is that spike there from March around 5 pence. You can see the top of the channel there, just below it at 4.5. And upside valid while we were above a recent broken resistance at 3 pence. So while we're above that on an end-of-day close basis, feeling good about that situation despite all the noise. And we've also got the RSI pushing above 55 as well, which is a better look. Finishing off with United Oil and Gas, which has been almost as difficult as, or maybe even more difficult than Predator. Here you can see that we have the gap higher, filled the gap, and then bounced again. Nice candles again for the last 3 sessions, opening at the low, closing at the high, or being at the high at the moment. Looking for 0.15 0.5 as the initial target, and hoping by the end of next month we get up to 0.19, which is the top of that gap down that we had in December. 50-day moving average rising now, which is normally a positive. When we come off the low, and you can see that we left a gap there and have been too strong to fill it back in March. The other point to note is that we've had an RSI 50 rebound, which is also, as I say, many times a leading indicator on the upside. That's it for me today. More updates tomorrow, except finishing off, actually, I forgot about this, Fragrant Prosperity. Here we're bouncing off the old target there. The old target there around 1.45. Above that, looking for the next level up. Nothing really on the chart between 1.45 and 2.8 pence. Hopefully we can get that by the end of next month. I'm glad I just about remembered that. With the shares backed by a golden cross there as well between the 50 and 200-day moving averages. That is really it for today. More at the same time tomorrow.